All right, everybody, let's go ahead and get started today. Thanks for joining in. We've got a very timely conversation. Usually, we try to make our conversations, our topics, evergreen, so they're kind of always applicable. But today, we're going to specifically talk about home buying, the thought of purchasing a home during an election year, season, and kind of the implications, the thoughts to consider, and just kind of toss around some ideas of what might be points to entertain while you're buying a home. With that, we'll bring Chase in, our co-host. How you doing today, Chase?
I'm good. I'm really good, actually. Pretty interesting times we're in, so it's always fun to have these conversations.
Yeah, we chatted, just the other day about what our topic's going to be, and uh, obviously the election's all over the place, so it creates, FUD, fear, uncertainty, and doubt. So hopefully we can just have some conversation to shed some light on some things and uh, probably not eliminate but minimize some of that.
Yeah, yeah, absolutely. I hope so. That's the goal, right?
That's the goal. Yeah, let's do that. But first, let's do some real quick housekeeping here. For those of you that I haven't met, my name is Jerod Lee. I'm the associate broker and team lead here at My Home Connection, also known as MHC Realty. We do have a sponsor for today, and it's our perfect home buying process. We've spent the better part of the last couple of decades developing the tools, the resources to help make the home buying process, efficient, hopefully fun, educate you during the process. So we have a lot of information from podcasts that we'll send you to help answer a lot of questions, secrets of the industry to address a lot of the unknowns, as well as for those of you data-driven folks, some reports, and then we have a special offer up to $500 on both the appraisal of the purchase of your home and as well as the home inspection that will pay at closing to minimize some of those costs. So with that, if you have any questions and want to take advantage of the perfect home buying process, please reach out. Now, with that being said, let's go ahead and bring Chase back on. Yeah, I mean, I hate to jump on the bandwagon, but I think we know a lot of the reasons why there are conversations around it, and it's to draw eyeballs to their content.
Yes.
You know, some people, we're not paid for that. No, we don't. Our sponsor is us, so nobody
Right.
nobody sends any money to us. We don't have any ulterior motive. We just simply want to have open dialogue and put people at ease and make it more of a logical decision than an emotional decision, just because
Right.
obviously the results are just inherently better typically.
Yeah, absolutely. It's pretty easy to get spun up right now. With social media, um, whether it's the regular media, social media, whatever, we have gotten into to where everything's clickbait. Everything's meant to incite and to be dramatic. And so all of that, like, I mean, we as a nation, right, have really gotten
Hmm.
caught up in that. We believe a lot of it, and letting that outside influence drive your emotions can lead to bad financial decisions, I
Yeah,
think. So,
yeah, yeah.
like to mitigate that a little bit.
Yeah, yeah, same. And I find it interesting as in putting some thoughts together for this conversation. I reflected back that our recommendations, I can almost guarantee aren't going to change. The
Right.
fundamental reasons why you're going to make a decision to buy or not buy are going to be the same. So it's not what's happening in the world; it's how you've positioned yourself.
Right.
Have you done the right things? Are you prepared? How prepared do
Yeah.
you need to be? Might be the question. Okay, things may go in a positive direction. Great. If they go in a negative direction, how deep?
Yeah.
So how best can we position you to be okay in that kind of deeper negative direction? I think that's more
Yeah.
of the way
Yeah.
to frame this whole conversation.
Right.
So, yeah, let's see. Let's just bring these topics back in. Usually we'll go through, our agenda kind of topic by topic, but really what I wanted to do here was just put them all up and just make this kind of a free for all conversation and talk about all these, kind of at the same time. But I think the first one here is ultimately the biggest one, and that's where is consumer confidence at? And the real reason we're having this conversation is because in an election year, confidence is typically the lowest it's going to be of any time.
Yeah, I think so. The buying and selling of real estate does always tend to slow down. Going into election, people kind of want to see what's going on. On top of that, most markets are the same. Well, I shouldn't say most. A lot of markets the same way as you go into the winter months, right? It tends to slow down anyway. A lot of the states building slows down because it has to. And so you have a number of factors that would tend to lead to a slower real estate market, going into this time period. And again, to reiterate, like with all the rhetoric that's out there, I think that's having a pretty massive effect. You've got both sides of the spectrum to where, I mean, literal world is going to end, after November 8th, and then, and you get that from both sides, right? Like just to be clear,
Yeah,
we both have political affiliations, which we are not. That's not what this is about. This is
correct.
about how both sides drive the rhetoric and both sides spin up the fear, and how do we avoid that with our financial decisions, right, and with our real estate investing.
Yeah, I think that's a good thing to restate. And maybe I should have emphasized it way more up front. Is you're correct. This is not a political conversation. We're not weighing in on either side. We're just trying to talk about, how things operate in general, and then now you put on, the complication of an election year being the additional unknowns. And I think, some of those are. Maybe what job you have, what industry you're in, right? Uh, but I think one thing that's more helpful this election year than any other is we have a pretty darn good idea, if not specifics, about how each party is going to manage, run the country.
Yes.
There's no hypothesis this time. There's no wondering because Trump's run the presidential office, and Biden Harris has. So there's not a whole lot of guessing at this point.
No, and there's golly, there's different things, right, that an individual president could feel and believe. But when historically, like you said, we've seen kind of both of them in, Trump obviously, and then with Harris, affiliated with a cabinet. You really have to more look along party lines,
Mm-hmm.
right, and what they've done, and historically, they have different conceptions on what will help the economy, right?
Mm-hmm.
Um,
Energy.
right, yeah. So the Democratic Party typically leans more towards assistance, like down payment assistance, like Harris has already talked about, down payment assistance, and them, handing out programs and monies in order to facilitate things. Whereas the Republican Party typically goes along the lines of tax cuts and deregulating the system, right?
Mm-hmm.
And you can look back historically, and both sides have done positive things for the real estate market.
Mm-hmm.
That's the
Just
interesting thing.
different levers doing
Right?
similar
Yeah,
things.
exactly. And it leads to different outcomes and things like that, and that's where people can really get into the weeds. But you need to look at, okay, so really good things can happen from both sides as it applies to how I want to invest in real estate. I mean, if you look at Roosevelt, with the New Deal, right, and then you had Reagan with massive cuts in his era, and then you had Clinton, right, that did, everyone should own a home. Like there's things that spur, depending on how much of that they do, right, and how long they run programs and things like that. That's what leads to that effect, that after effect that could be positive or negative, right?
Mm-hmm.
But in the moment, you just need to take advantage of whatever you can in order to get your real estate purchase started, right?
Yeah, the approach to helping the consumer is different, but the outcome obviously is they have our best interest at heart and are doing things the way that they see or feel that they should be done. Uh,
Yeah.
just real quick, I don't want to spend a bunch of time on it, but one of the things I want to point out, like their approach to energy being drastically different. I could see why there'd be pause there, right? If you're in the solar industry, you know, or you're in the fossil fuel industry, I could see why you'd want to pause and see what direction that's going in, because that's going to affect you, directly. But I think
Yeah.
generally speaking, unless there's very, diametrically opposed approaches to things, generally speaking, uh, their ultimate objective is to improve, you know,
You have to believe that, right? Like
right.
if you don't have that in mind, right, then I mean, the outlook's going to be pretty grim. So I think we have to approach that way, and ultimately, all what we need to care about is how do we move forward? You know, how do we keep going with our investments and building our portfolios and take care of ourselves, our communities, our families, and to the best of our ability, and that's ultimately what we're talking about here. and
Yeah.
and any other thought is just like what a horrible way to live, right?
Yeah, yeah. Well, that's a good point, and you're talking about one of the the pillars that we recommend to the approach and of home buying, and that is it's a marathon, not a sprint. So if every
Yeah.
4 years you're caught up in where we're at, that doesn't speak to a long term a personal approach to home buying. That seems like you're
Right.
you're kind of thinking short term, and you're maybe a little more vulnerable than you should be, uh, because of fluctuations in what our economy does and what the elections do. Where our approach is, let's make a plan, let's make a long term plan, and know that there be peaks and valleys, but over time, real estate, as we know, has always appreciated and appreciated well. So if
Yeah.
if that's your strategies long term, uh, you know, bob and
Which is
weave.
realistically what it should be, right? Unless you're fix and flipping, and then you're timing micro markets, right?
Yeah,
Pockets of and that's we're talking about something different, but for the most of us, whether it's a primary residence or rental properties or whatever, real estate is you should look at it as a long term investment,
yeah,
right? Because that's how you gain more wealth, right? The appreciation over time. Even looking at this last year, we're supposed to be in a bad market, right? And real estate's appreciated 5% year over year at this point.
yeah,
So that's pretty good appreciation with the biggest purchase you've made. And if you break down, I think it's interesting. Like you can literally break down parties and policies and what they've done and pick out good and bad for both, right? When it relates to real estate, I'm sure you can do it, whatever,
mhm,
right? But why get into the weeds with all of it? So, but if you look at obviously the New Deal was, instituted to spur us out of uh, the Depression, right? So they get the New Deal going, and then they create the 15 and 30 year fixed mortgages, and that's all great and dandy, and that's how we're supposed to buy homes. I personally would like to see some evolution in that because I think the banks are making so much money off of those, and I think that's probably why it hasn't changed. So if you want to pick some pros and some cons, right? Like we get the economy moving, but now the banks are making a whole bunch of money, and they don't want to change things because of the amount of money they're making.
right,
So that's a personal pet peeve, though. So well, I digress.
yeah,
Um, but then you look at Reagan and all the tax cuts, right? It really spurred the economy. And then some folks say afterwards, left with the increased national debt, slowed things down, right? Then you look at Clinton and the changes that he made to loan programs, and everyone should own a home, and um, like it got everybody buying. May have deregulated things a little too much, with which is what helped lead to what happened in '06, '08, right? So it's like literally on same policies, two sides of the coin. So
yeah.
uh,
Well,
But through all of those ups and downs of all of that, the people that held on to their properties, even in the worst one, the one people remember because it's the most recent in '08, they had the people that held on to their properties made a ton of money coming out in 14, 15, 16 when the market did turn around.
yeah, Chase, I think you said a lot of very valuable, pieces in that conversation. One of them being, during an election year, each party is going to pick apart the negatives because nothing's perfect, right? So if you're going to think, this politician wants to move forward with these policies, the other politician is going to pick that apart, try to tear it to pieces, which is good, right? Because hopefully they'll improve that. But to think that one side's always going to be perfect and once it's perfect, we'll move on, that just doesn't happen. So
Right.
just say, generally speaking, we're always moving forward in a positive way. We're going to take some hits, take some blows, but we're also going to realize the opportunities. So
Yeah.
if you're positioned well, to your point, have the marathon, the long term approach, realize that not everything is good, there will be bad, and know what those implications might be in your particular circumstance, which we'll help you with. And then, by the way, there's always those opportunities as long as you're playing your cards right and working with the right people to help you, meet those long-term objectives.
Yeah. Yeah, absolutely. 100%. And I think with that, as we move, and maybe we can move forward to that timing piece because I can go on the other stuff forever. There's so much there to pick at. But I'm saying that, to kind of summarize the consumer confidence piece is that, really the lacking confidence that we have experienced that, even though the real estate market has been, solid through, and grown through this turmoil of the last 2.5 years. Most of the lack of confidence has come from rhetoric, and
Right.
it's not really what's going on. So understand where you're at, understand where the market is, and make your decisions from that.
Yeah, this is a heightened season to pick apart things that don't work. Again, it gets the eyeballs, it gets the attention, it gets the conversation, and if you fixate on that, you'll get paralyzed.
Yeah.
Um, so anyway, I think the lion's share of this conversation is going to be that consumer confidence, and we could continue to talk about that. But I think the overarching is, what is your confidence? What industry are you in? What directions that industry is going in? Did you position yourself well? Did you plan well? Go ahead.
That's it.
Yeah. Okay.
That's it. How you're positioned yourself. You need to focus on yourself, your own personal finances, and being ready to make a move when you're ready,
Yep.
not wait for the market to tell you when to make a move.
Yeah. Yeah. What? Yeah. If you're set up based upon external forces, probably not a good outcome. If you're
Right.
set up based upon interior, inward forces, meaning the things that you can control, your ability to position yourself well, where's your credit at? Where's your debt at? Where's your DTI at? Where's your savings at? You know, the stability of your job. Like, those are all things that you can, for the most part, control.
Yeah. Yeah, and it's interesting when you talk about timing and when to make the move and when not to make the move. Like, obviously, especially with what we're dealing with, like, well, a lot of what we're dealing with is people buying the primary residence, right?
Mm-hmm.
We work with investors and builders and a number of other people throughout the industry, but a lot of what we do is people buying their first home, right?
Mm-hmm.
Like, that's I don't care what anybody says. That's the first step. I will fight them. That's the first step in building wealth, right?
Yep.
For the majority of Americans, I heard a number the other day. People that didn't own a home, people that were renting, I can't remember if it was their cash wealth or what it was around 8,000. And for those that owned a home, it was 148,000. Right, so it jumped that much just by the equity in there by owning a home. So
Yeah.
that's the kind of difference we're talking about when we're talking about building real wealth,
Right.
right? So, see, it would have been their cash net worth. That was the number I was trying what I was kind of trying to come up with in my head there. Um, so knowing that timing wise is when are you ready,
Right.
right?
Right.
The market could be going up or down, but if you're ready to buy, the market, the real estate is going to appreciate over time. It just is. So if you're ready for that long-term hold and you can afford now, then the timing is right for you.
Yep. Yeah. Yeah. I don't want to counter that comment because it's true, it's accurate, and I think it always will be. So yes, are you ready? We just did an episode on timing as it relates to other things that are out of your control, and it was
Mhm.
actually called the how do you identify the perfect storm to buy a home, things to look for, and that was over a half an hour long. So we talked about that at great length. Yeah,
Yeah.
but what I find interesting is we in that conversation, the things to look for, it's now.
Yeah.
We
Yeah.
we
Yeah.
checked
It's very good right now. A lot of
yeah,
those boxes get checked for sure.
more of those boxes are checked than almost. I mean, I've been doing this for almost 20 years, licensed for coming up on 20 years here pretty quick, and uh, I'm trying to think of when there was that many boxes checked. I'm sure there were, but I'm just saying.
Maybe early 2000s before it really took off, maybe.
Yeah.
But it's yeah, right now it's as good as I've seen. Um, and I think, we tend to just discard that because pricing has increased, right? Like
Mm-hmm.
the price of a home is higher than it was in the early 2000s or than it was 5 years ago or 10 years ago.
Right.
Um, but other things have gone up too. I think ultimately, in my opinion, it's not necessarily as much the price of housing, but the fact that we've been dealing with that with the inflation on everything over the past few months, right?
Yeah.
So, or past year or so, and so as they get that stuff under control and more of people's paycheck is freed up, then I think the housing price maybe might not be you know as big a factor as they're feeling right now.
Right. Right. I'll make one comment that about what you said, like the early 2000s. I think that was a good opportunity because of values. I think it just meant it was more of a mid to a short term, more kind of the sprint direction because values did go up so much. Wealth was accumulated. Obviously, now that our values are up, it's interesting because, we typically appreciate on a percentage of home value, which, 3% of a higher priced home gets anyway. But there was
Yeah,
a more aggressive appreciation, uh, you know, curve trend during that time because our values here in Idaho were so low, prices
yeah,
were so low relative to the rest of the country. Now, we're not, I think we're like 7% above the national average, if I remember right, the
yeah.
last time I looked. So uh, that's to say, on average of home values in the country, we're not that far off. We used to be
No.
really low, but we're also not high
Hmm.
either. We're not obnoxiously high. We're not,
No.
California prices or Washington's or.
There's still places lower than us for sure,
Mhm.
and but still places higher. Like so, it's just we're kind of in that sweet spot. I mean, we talked about the trend line in that other video and how things typically, if you drew a line at a 45 off of a graph, that would be your overall trend line at how housing appreciates, and then you get these bubbles where it's below and it's above, and early in COVID it was way above. It was a little inflated because of the current conditions and what was going on in the mass hysteria.
Mm-hmm.
But if you look at that line, values haven't really gone down. They've just settled down to the normal appreciative trend line that we would see.
Right. I think that's a really good point too. We base a lot of stuff on where we were, just recently. It's like that, the 2-3%. People are like, interest rates are really high. Like, well, no, historical average is about 7%, which we're now under.
Yes.
So,
Yeah.
you know,
Bit under. Yeah.
uh,
So yeah,
rel-
it's really, I think it's just like I said, it's that again when you talk about perfect storm, it's also a perfect storm for what people were feeling, right? Because housing prices went up, interest rates went up, and then everything in the grocery store went up. Like
yeah,
everything that we did, like we were like, holy, when it was all at once,
yeah,
right? So I think as some of that other stuff settles, we'll feel less pressure there. Uh, you know, Throughout history, there's actually only been a couple times where real estate values have gone down. When you look back at the recessions and and things like that, real estate typically either flatlines or it increases at a slow pace,
Yeah.
right? So if you look at the last 2 years when it's supposed to have been as hard as possible to survive,
Mm-hmm.
right? With all of these inflated, all the inflation and the home prices still increasing at a 5% clip year
Mm-hmm.
over year,
Mm-hmm.
um, you've still appreciated. The
Yeah.
value in your home is still growing,
Yeah.
right? So
Yep.
I think, and that's where I go off from. It's always a good time to buy, and if you try to time there's a lot of people that think, and I think we discussed this in that other episode as well. There's a lot of people think that um, we're still going to have a massive bubble burst, right? Like in that '08, like because that's what people know,
Right.
right? That's the most recent history. But if you look at equity in homes, on average, the people just with mortgages, not the ones that are paid off, which is at an all-time high of people just having homes paid off. But the ones with mortgages have access to $200,000 in equity across the nation. That's the average,
Mm.
right? I do believe we're a little bit higher than that in Idaho. But the negative equity, which is the number that you'd want to look at to see how many people are upside down,
Mm-hmm.
like how much short selling, how much foreclosing are we going to see?
Pre
That's at one
2008 numbers. Yeah.
right. Yeah, it's at 1.7% of all homeowners with mortgages
Yeah. People aren't
have
going to
negative
walk away
equity.
from their home.
Yeah, so and then now we're seeing rates come down, right? They're trending down. So now the people that couldn't afford to refi to get themselves out of trouble and gain access to that equity are more likely to be able to. And each percent that we decrease, 5 million more buyers or more people are eligible for a mortgage, right? So it's just, I mean, you want to talk about a perfect storm.
Yeah.
that and I feel like I'm just going on and on and on, but like our market is just, and I don't know. I don't want to jump ahead. We're gonna talk about that here in a minute. But
Yeah.
timing wise, I like just to kind of end my blather right here. Just timing wise, timing's now. You should move now if you're in the right financial position to do so.
I think that's the caveat. If you're in the right position, if you're not, and you're going to get yourself kind of potentially jammed up, it's not good. But yeah, again, we spent, I think it was actually the better part of 45 minutes on that conversation.
Yeah.
But I think it's important to also spend time on that because the people that are waiting, once the election's done, aren't going to be waiting.
Right.
And the rates have been going down.
Right.
So once the consumer confidence comes in, right, all the unknowns are now known, and you're like, okay, now let's go. And we just had what, half a point?
Yeah.
But
Yeah. Off the Fed funds rate. Let's touch on that because I'm still getting a lot of phone calls about that.
yeah, so rates, there we go.
Yeah, so let's get into rates really quickly. So they've been trending down over the past, really heavily over the past 6 to 8 months, at a pretty good clip. And where we once touched 8, we're now down, sometimes in the fives, low sixes. And so understanding what the Fed did. So the Fed basically they cut the Fed funds rate. The Fed funds rate is not mortgage rates. Excuse me. The Fed funds rate is the rate at which banks borrow money, essentially. Okay, so you will see HELOCs, consumer loans like auto loans and things like that. Those will be directly affected. Mortgage rates are based off the mortgage-backed security market, right? Off that bond market, and that is not unlike the stock market in that the way people feel and their expectations and all that go into that market. So there's we have to wait and see what the market feels the Fed did, whether that's positive or negative, and then we see that reflect in how they're buying and selling those mortgage-backed securities.
Mm-hmm.
Okay, and essentially, as people expected that, the half a point cut, we were at 6, now I can hurry and refi at 5.5, and that's not how that works, right? So essentially what the Fed did was they released their stranglehold on the economy. We have had an over conservative Fed policy for the better part of a year now, if not longer, right? For the market that we were in, and even the Fed chairs have came out and said it themselves. For the market that we were in, the policy was too conservative.
Mm-hmm.
And so they've released their stranglehold. So that trend that we've had with interest rates trending down, basically that means that should continue. That doesn't mean that it won't be without its own volatility, the ups and the downs, because from day to day that market changes.
Right.
People buy and sell based on other opportunities and things like that. So there will be a little volatility, but we should continue to see overall rates trend down, and over the next couple of years is kind of what we're expecting.
Yeah. Yeah. No, good topic on the rates, because that was also part of that last episode, was that
Mm-hmm.
if rates are in a downward trend, obviously for your upfront purchase and then potentially more short to midterm, if you can refinance after that while purchasing at the lower price. So we're seeing that happening. So if rates are going down, confidence picks up post election, demand comes on. So let's chat a little bit about what that's going to do to inventory. Probably builder inventory first, right? Because their confidence in where our economy is going to dictate what they're going to build or not going to build. And back to my comment earlier, I think just the fact that the unknowns are known now is in our market is going to mean they're moving faster than
Yeah.
they even were before.
Yeah. So, man, can we kind of combine inventory demand into
Yeah.
the same
Yeah. Yeah.
conversation here?
Yeah.
I think that there are two biggest issues with the real estate market moving forward, right? Like realistically, to kind of touch on demand, we are, and I know that we've said this in previous podcasts, that may have been the last one, but the cross section of home buyers in the United States is the largest that we have ever seen by over 10 million people, right? So everybody talks about the baby boomers and how they were the biggest cross section of our population. Well, they've been outpaced. And so essentially, with all the building that you see in every city across the nation, they're trying to catch up for the demand that we've never experienced before, right? So it's not like when you talk about inventory being low, we're not talking about a little low like in past markets. Like we've never had the inventory to service the demand that we're experiencing right now.
Nor for the foreseeable future.
Right. And so, that'll, 30 years down the road, 40 years down the road, when we're not here, we'll get to see what happens when you don't have the same population and all this housing.
Right.
But for now and the foreseeable future, that is going to continue to be a problem. That's why you see so much multifamily going up, right? Apartment complexes and townhomes, because that's one of the quickest ways to try and reach that demand. So, and then if you put in the political motivations, I call Idaho here we experienced a great political migration, right?
Mm-hmm.
That's for states like us, on top of the population problem, we're also having excessive demand due to whatever political concerns you might attach there, but makes it very difficult. It's an issue that we're going to have to continue to deal with for some time.
Yeah. Well, we just rolled past the half an hour mark, so let's we're probably going to restate the recommendations we've already stated, but let's kind of be specific. And I think the always recommendation is what we said earlier. Where are you at financially? How have you, what have you done to plan out your home purchase process? What things have we, all collectively as a team put together to help put you in that stable, secure circumstance where whatever happens, happens. So that's the ultimate recommendation here, I think.
Yeah.
The more short term is, I think we captured it all through all the topics, is there's an opportunity here.
Mm-hmm.
And we typically don't like, say, timing, but interestingly, on our checklist of when to buy, we're checking a lot of those. And the deeper we get post election, those opportunities are going to begin to dwindle a little bit, because the demand's going to pick up, inventory is going to, or rates are going to go down, demand's going to pick up. So anyway, I'm just saying those boxes aren't quite checked solid green. Now they might be checked a different color.
Yes. Yeah, and I'm with you 100%. The first thing that we always look at is your financial well-being, and are you ready to do something now? And if you are, you know, obviously, little disclaimer here: neither Jared or I have a crystal ball, but from what I can see, I do not foresee housing prices going down anytime soon. We don't have the inventory. We have high demand because that's just the population cross section of where we're at. Rates have been moving down, and ultimately that means that's going to drive pricing up. Like anytime it's yeah, if you think about the grocery store, or you think about somebody that's selling a widget and that he's down to his last one, and they're not there's no more available for a certain amount of time.
Prices.
People are willing to pay more for that last one, right? Because they want it now.
Yep.
And so that's going to drive your pricing up. And so I think that's probably what we're going to experience. Um, it's hard to say at what rate, because there are still a lot of external factors. But I think we can expect housing prices to go up. And as they go up, and as people come back into the market with the lower rates and higher consumer confidence, you're going to see the incentives from builders going away. You're going to see sellers not willing to pay for closing costs. You're going to it's just going to be that much more difficult to get qualified.
Yeah. Yep. No, that's all good stuff. And I think, the ultimate recommendation is there's a lot of moving parts, and just call us. We have that
Yeah.
free, no obligation consultation for the reason we just talked about, because um, even in your personal circumstances, there's nuances, specifics that you're not going to know about until you talk to your lender to say, what are my options here? What things should I improve, pay attention to put myself in the better position? So I think just the last recommendation here is give us a call. Again, no
Yeah.
obligation. Let's chat, and
Yep.
we'll chat about if it makes sense or doesn't make sense for us. Honesty's always the policy, so we're just gonna
Yeah.
shoot you straight.
Talk to any of our past clients. We're not going to push you into anything that you're not ready for. It has to be the right timing, right situation for you.
Yep, yep, absolutely. Well, I think that's a good thing to wrap up with. We certainly appreciate you jumping on today, Chase, and your input on all the lending side stuff.
Love it. Sorry, it's a topic I'm excited about. I didn't mean to ride roughshod over the whole podcast here, but
No,
it was
I
fun. It was a good.
totally anticipated that was going to be right in your wheelhouse. I appreciate you
He's gonna run
bringing
it
it
back.
up, because I'm usually that guy. Can it be evergreen? Can people look at this 5, 6, 10,
Yeah.
12 months later? But I think this is a really timely, good conversation, and I hope our viewers take a lot out of it.
Yeah.
So
Me as well.
very cool. All right. Well, other than that, we'll wish everybody a blessed one. Thanks.
Have a great day.